What's up, traders? Today is Tuesday, November 7th, and it's currently 12:41 p.m. And excuse me, I might be a little out of breath because I just came from working out. Now here, today we had a nice win during the live session for a gain of 1.5%, and that was from this US 30 trade. Now this was based off of this SAR zone right here on the 15-minute time frame. So I'll just go ahead and replay it real quick. So we had a break and continuation setup of this double SAR zone. Actually it was a triple one. So we want to see how price reacts from this zone. So that's your break candle, and then you have your continuation candle right there. So at this point the trade validated there because that's a valid break and continuation. And then 50 pips stop loss, 100 pips TP. But remember, you always have to ask yourself, relative to your entry, how far is the SAR zone you're trading? So the SAR zone we're trading would have been like 15 pips away, which for me I considered a little bit of a red flag or overextension of price. So I would have rather waited for a retracement and then drop down to the 1 minute to find an entry there. But to keep me from forming into the trade, for somebody who would take the trade upon validation, I'm interested to see at what point would they be setting break even, so that if price gets to them first, to their break even first, then I can stop waiting for a retracement. So at this point we then move to the 1 minute time frame. And remember, the 1 minute time frame, I do not look for, or I don't extend the SARs if I'm using the SAR strategy. And then what we would do, if we move down to the 1 minute, we would be looking to trade a live 1 minute SAR. So here we were waiting for 2 consecutive 1 minute closures above a live 1 minute SAR formed. Now liquidity started dying off in the market because, keep in mind, SARs are formed especially during volatile periods. So here we were just waiting and waiting. But here we needed price to come and test the zone first. So before giving this person a 1:1, we needed price to test our zone. And keep in mind, so we don't impulse trade, we wait for trade confirmations. But if we are waiting for a retracement, we would want price to test our zone first. Let me redraw this. Would want price to come back and retrace into our zone, and then now we are looking for the 1 minute entry. So here you can see price came back for that retracement before giving this person a 1:1. So it already validated testing our zone. Now all we are waiting for here is a live 1 minute SAR to be printed, and then we would go ahead and enter. So we kept waiting and waiting, and at this somewhere here we had that live 1 minute SAR printed, which is right there. So at this point I told folks I was buying US 30 with 0.75% risk, 50 pips stop loss, 100 pips TP. So that's that setup. That's right here. So you can see, I'll just use this one right here and re-extend it. So you can see here, trade started in a little bit of drawdown, and then price shifted back to the upside. So keep in mind, so same thing here, we would be, when we achieve a 1:1 risk to reward, we would be going ahead to set break even. So at this point our trade had already achieved a 1:1 risk to reward. So I went ahead and told the people who are in the live session to set break even. So at this point we were risk free. And keep in mind, for me this week I've started risking 1% per trade, but for the community, the trades that I'm still sending out, or that I send out, or that I take as official trades, I am sending them out with 0.75% risk. It's just been a personal goal of mine to get to risking 1% per trade over the last 3 months. So it's taken me 3 months of preparing to get to risking 1% per trade. But even with that, I'm only giving myself a limit of 2 losses a day. So that means if I lose 2 back-to-back trades with 1% risk, I'm done for the day. With the members of the community, I really don't encourage risking 1% per trade, only if either you're doing 1 trade a day or maybe 2, and you have the discipline to call it a day if you take like 2 consecutive losses. So that's why I'm still capping it at 0.75% for the members in the community. But personally, even with the results that you'll see, my risk is 1% per trade. But anyway, with the wins or the losses, I'm still going to count them based off of the 0.75% risk or lower. I'm not going to count them with the 1% that I'm taking personally. So here you can see price did a little bit of retracement, but eventually price went back up, and it did take a little while, and there it is. Price hit TP, and then immediately, like right there, tapped into TP, and then from then on melted back down to entry. So this was such a close trade, but we hit TP on that. So again, that was based off of a 15-minute trade. It was a little bit high up because we didn't get that live SAR when I would have wanted it. But for example, anybody who had hopped in down here, they would have on validation, they would have achieved TP quicker than us who waited for retracement. But anyway, that was the US30 trade. We also had this gold trade during the live session. So this was based off of the new momentum strategy. If you go on the daily time frame, you'll see that for gold here, we had this momentum, valid momentum buy here, and I'd sent this, I was watching this zone during FOMC last week, this candle right here that gave us this buy momentum to the upside on the daily at 1963.2. So on the live session, we were looking at what price was doing around 1963.2, and we needed a 1 minute momentum signal, which we did get during the live session. So with the momentum strategy, of course, even on the 1 minute, you'd extend the SARs, but with the SAR strategy, you do not extend the SARs on the 1 minute or the 5 minute, also because it's just too many things going. But right here, 1963.3.2, that's the zone we were looking at, and then we got this valid buy right here. And then that's the trade we took to ride price up. So I know I don't like extending these SARs to on the 1 minute because it just clutters the chart. But we were looking to tap into that daily buy momentum. Trade achieved a 1:1 risk to reward somewhere around here, and then we set break even. And then trade unfortunately came back and took us out at break even. So for today, for the gold trade, I had called it with a 0.375% risk. So it goes back to that part where I wouldn't want anybody to do like 2 back-to-back losses with 1% unless they are already advanced traders. So this one, the gold trade, I called it with a 0.375% risk. The US 31, I called it with a 0.75% risk. So the US 31 hit, gain of 1.5%, and of course gold came back to break even. So for the day, we have a 1.5% gain. But you'll see for me in the results, my gain is a little bit higher because I risked 1% for this trade. But if I had risked 0.75%, the gain would have been like 3,000 profit right here. But for me here for the day, I'm up 2%. But you can see here I recorded 1.5% for the official trade. So with the official trades, I just used the recommended risk that I normally send. But anyway, that's a good way to start the trading week, and we'll see what the rest of the week holds. All right, see you guys next time. Peace. What's up, traders? Today is Wednesday, November 8th. It's currently 1:56 p.m. So just going over a trade I'd sent out in the Discord this morning, which ended up in a loss. So not this one, this is a trade I am in. I forgot to send this in the Discord, but anyway, if we go to the Discord, under indices, I had sent out that US 30 trade. So I said buying US 30 now with 0.75% risk and 100 pips TP, 50 pips stop loss. So the trade was based off of this setup right here. So I'll just use the bar replay function real quick. So there was, during market open, we had this zones right here. So this right here was a test and rejection entry. But because the trade setup or the distance, the entry validated right here, but a red flag was overextension of price. So looking at this, because you should always ask yourself relative to your entry, how far is the SARs you're trading? So here the SARs were about 10 pips away, 10 to 15 pips away. I'm sorry, yeah, 10 to 15 pips away from the entry. So I decided to wait for a retracement on the 1 minute time frame. So for price to retrace back to this SAR zone right here, double SAR, and then to find an entry on the 1 minute time frame. So if we are going to the 1 minute time frame again, no need to extend the SARs. And then here we then go down to the 1 minute. So what we would want is for price to come back and retest this zone, which it already did, and then find a 1 minute live SAR. So meaning like 2 consecutive 1 minute candles closing above a live SAR. So for this live SAR right here, only one candle closed, the next candle did not. So we are looking for that moment where 2 consecutive candles will close above a live SAR. And we keep waiting, we'll see that here at this point you had 1, 2. So at this point, that's when I sent out that in the Discord that I was buying US30 now. And for this particular trade, started off in profit pretty nicely, but then we had a retracement before we were able, or before we could set break even for the trade. And you can see eventually the trade came down and was taken out at stop loss right there, and US30 kept melting. So this current trade, so actually, and I haven't recorded that loss, so let me do it now that I'm here with you guys. So that's for today, so that's just minus 0.75%. And we are still up for the month like 0.125. So the key thing is just proper risk management. But right now, personally, I'm in this buy right here for US30. It's based off of a 30-minute setup, or actually 15-minute setup. I forgot to send this in the Discord. I thought I had, but I only saw that I hadn't way after I was already in the trade. But anyway, however this trade goes, whether it's a win, whether it's a loss, it won't count to the returns. But here you can see I just updated it in the trade ideas that I thought I'd sent this before, but I think I was tripping. But that was the setup that I'm in. At this point I was up like 1,000 or 984. But I'm still in the trade, and we'll see how that goes. But anyway, for that one, that wouldn't count as an official trade. The only official trade for today was this one, and I did say stop loss hit for minus 0.75%. So we'll see what the rest of the week has to offer, and we'll go from there. I'll catch you guys next one. Bye. What's up, traders? Back again with another trade recap. So unfortunately today is Thursday, November 9th. It's currently 11:08 a.m. Unfortunately today we took another loss on US30, and US30 is coming back up. But the trade was based off of this hourly setup. So in this hourly setup, so it's actually an hourly and 4-hour setup. So you see we have a double SAR zone right here. And if we mark it up, this would be a break and continuation entry right there. So break and continuation, because this candle broke, closed above, the continuation candle continued. And of course, this would have been a red flag for this trade, because the validation weight validated at, because price was overextended. It was also before New York Open. But since we weren't taking it here, we would wait for a retracement to the SAR zone and then drop down to the 1 minute time frame and trade the live 1 minute SAR. But in order to avoid FOMO, we would be interested to know if somebody who took this trade, where would they achieve a 1:1 risk to reward, so that they would be setting break even at that point. So here we went down to the 1 minute time frame, and if we're going down to the 1 minute time frame, of course here we don't extend our SARs in order not to have the chart cluttered. So this was the zone, right? So again, we go to the 1 minute. So we would have, so this was that retracement we saw on the hourly time frame. This is the arrow that we pointed here in order to show where somebody would achieve a 1:1 risk to reward on the hourly. So the trade setup was right here. It validated up here, but of course we went over why that would have been a red flag. So we waited for US30 to retrace back down, and we tried to look for a 1 minute SAR. So the 1 minute SAR, if I use the bar replay tool, we would need 2 consecutive candles to close above after the retracement, and we had that at this moment here where we had 1-2 candle closing, and at this point it was on the live session, so I said I was buying US30 with 0.75% risk, and unfortunately here we had that retracement back to the downside that took us out at a loss, minus 0.75. But if you see, US30 is now pulling back up. So that was just being squeezed out, because if we are looking at the daily bias for US30 is still bullish. Gold is bearish. EU is bullish, and the US dollar is bearish. So it's just one of those trades. There's nothing we could have done with this. I would still, looking back, I would still take the same trade, and it was a good trade, but you can see we just got stopped out and price came back up. So that should be it for the day, and I went ahead and recorded it in the spreadsheet as minus 0.75% for Thursday. So it looks like this week will be at break even because we had a 1.5% win on Tuesday and then took a loss yesterday and took a loss today as well. And overall currently for the month so far, only down minus 0.625. So that's a nice ratio because it's maintained by our 1:2 risk to reward with break even set at 1:1 risk to reward. So we'll see what the rest of the day holds, and then if we do get any other setups, or if not, we just wait for tomorrow. All right, catch you guys in the next one. Peace.